All right, cool. So the topic for tonight's charting, obviously, what are key levels and how to identify them? I think it's also worth noting why I use key levels and also why I don't use other things. I found simplifying the technical part of what I do to really give me a lot of confidence in the other parts of trading and allows me to have basically spend more energy and time on what's important to me. So, you can use indicators, you can use flow. There's all sorts of different ways you can, find trades and find setups. But at the end of the day, after years of trading, I found out pretty quickly that you could have the best system and strategy in the world, but if you can't follow it and be disciplined, then you're still not going to make money, right? So, why not focus on the simplest system technically that you can and just make things easier? That way, you give yourself more room for the discipline and psychological part of trading. So that's my methodology. Why I focus on support and resistance levels, and nothing else. I used to just to be clear. I've gone through in my experience as a trader, all kinds of different indicators, moving averages, different strategies. I've been there, done that, and this works for me. It's not to say though, I don't think that you can't be successful using indicators or moving averages or different things. I think it's just the majority of traders use them incorrectly. I know plenty of traders that do well that use certain averages or specific indicators, but they know how to use them. They're not using them for confirmation bias. They're using them simply as a checkbox um, of different things before they consider a trade. So there's a right way and a wrong way for sure to use different indicators. And also, it's worth noting that most indicators, if not all, um, they react to price. So price leads. Price is a leading indicator. So if you learn how to read price, then you're going to be ahead of the game, right? Because your indicators are going to react to whatever price does. So anyway, enough ranting on that. But that is why I use basic support and resistance. There's really nothing, no magic formula or secret sauce to it. You do get better. I would say charting is one of the easiest parts of trading. So if you struggle with that now, be encouraged because it just takes reps. Once you chart and go through charting a bunch of charts day in and day out, it gets to be very repetitive and pretty easy to do. That's the easy part, as I tell a lot of traders. So, cool. So, what is a key level? A key level is really simply just a level that's seen the most price action, right? It doesn't have to be a specific level. Sometimes it works out that way. Other times it works out, as more of a zone, which I've drawn a couple zones on the SPX, which is the S&P 500 chart, where it might not be a perfect level, or it's a level or two are pretty close together, and it's really just where price action has seen the most activity. And the reason that's important is simply because as any trader, day trader specifically, or options trader, you're going to get paid when there's momentum. It's really that simple. If there's no momentum, you're not getting paid unless you're trading advanced options and collecting premium, which is a whole entire another conversation. But for the purposes of this, it really comes down to momentum. That's how we get paid. You hear me say all the time, as long as the market's moving, we'll make money. It's the thing that we avoid is the chop zone. I don't care if the market sells off or goes on a run. As long as it's moving, as a day trader, we can make money. So why is that important, and how does that come into play with levels? Well, when you have a key level, or a level that's seen the most price action, most tests, biggest moves from a specific level, that's where momentum exists. So once a certain level is crossed through, it's going to instantly be in price discovery mode to go to the next level. That's how you get your risk reward and different things. So boiling it down, it's very simple. Like specifically on the S&P 500 chart, you can see this 4160 area is super clear, right? There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 11 touches just between May and June, right? So this level is very well defined. So once price, can clear this hurdle, it's naturally going to go into the next biggest level of resistance, which is 4270. So then you ask yourself the question, okay, over 4160, the next big level is 4270. So that's 100 points, right? So like the risk reward on this level is very big. I've been talking about this level for weeks. We're finally getting close to it. Prior to that, we were talking about 39.41 down here. And once that finally broke, look at the move that we got. So that's, that's what a key level is and why it's important, especially for a day trader. We're not interested in trading this range here unless you're selling premium, right? Like everything I'm saying is within the context of a day trader and particularly an options trader that's focused on momentum moves. But this doesn't do us much good, right? These ranges, even in here, this was very difficult range to trade. But once you get clear moves through resistance, as you saw like in the last week or two, this type of move, there's a lot of money to be made. And, there are certain traders that lay in wait for opportunities like this. And if you're ready for it and sized properly, this type of a move can pay for months of waiting, right? Like you don't need to trade every day if you're able to be ready for moves like this in the market. So, yeah. So anyway, I do have some other points. Some key notes I have on specific levels is and these are things that I would, make note of. The larger the level, the larger the expected move. So if you have there's a lot of levels on this chart. If I were to remove all of them, we actually remove them. Okay, so if you were to remove all the levels from the chart, right? And the way I like to start with a clean chart is I focus on the most obvious levels first. So for the sake of this example, this 4160 area is very obvious. It stands out, right? You have a double bottom here and then multiple tests within here. And then back in May, early June is very clearly defined level, right? So this has multiple touches. The more price action you have near a level, the more touches you have, the more important it is. Also, the bigger measured move you have from a level, the more important it is. So those are two things to remember in identifying what is a big level. It's the number of touches, so the number of tests and holds or rejections, and then also the measured move from that level. So you have a double bottom here, and then you get this big of a move off of that level. When you revisit it again, you see hard rejections from that level from here in particular. Once price could not get above 4160 back in early June, we sold off to the lows, right? So those two things are very important in making up a big level. And I recommend when starting with a blank chart, focusing on the most obvious levels first. That's how I start every single chart. I'll usually start from weekly or even monthly and then work in. And basically I'm just, what are the most obvious levels? And you just keep it simple and start there. And I'll pause here in a second and read through the chat, see if you guys have any questions. If there's questions that I see that aren't entirely relevant right away, I'll go over those at the end. Starting at weekly or monthly and then working your way in and just plotting the most important levels that you see. And I could go into each one of these levels, but basically they're going to be the ones. I'm doing it relatively quickly, but I already know what the levels are and they jump off the page to me. But if you were to go through and look, they'll have, more than 10 touches and pretty big reactions to each move. Which brings me to another point of time frame analysis. So no matter what every chart that I do, I'm looking at multiple time frames. I also chart in Thinkorswim, which I have the monthly set up in there, but I'll usually work from the outside in. So I'll start with monthly, work into weekly, daily, and then hourly. So on SPX, we looked at the weekly chart so far, and we pull up the daily and see if there are other levels that stand out to us, and then plot those. So, the things that catch your eye immediately are typically going to be big levels. So like this consolidation and drop here, that stands out. So before I plot that, I'm going to go see how has price reacted to that at other points in time. So in the past, had two moves here. Let me get a bubble going. This. So you have consolidation here before this move, which was a breakout. If you were to zoom in closer, the market broke out above this level. It had a pretty big wick off of that level, rejected here. Obviously, this price consolidation here. You also have a move here that generated a 300-point bounce in S&P, right? There's a couple tests, back tests in here. It was trying to bounce before. Pretty big move back lower. On this bounce after the double bottom, it paused here. Once it broke through, it made another 300-point move, right? So there's big moves off of this 42.95, 4,300 level. And then continuing to the right, you have a big rejection here, three rejections here, right? So this throughout history has proven to be an important level. And you've also have big measured moves off of it. You have two 300-point moves. Actually, this was a 400-point move here. So you have a 400-point move, 300-point move, 300-point move, and also big moves over 300 points to the downside off of the rejection on that level too. So that 4,300 level is a very pivotal spot, right? And I'm doing all this, in my head, obviously pretty quickly after doing it for so long. But this is the process that goes through my head as I'm plotting levels. So, and then it just keeps going from there. I might like plot the level here. Like this is very obvious. You have 1, 2, 3, 4, 5, 6, 7, 8 spots that price on the daily chart rejected or broke through. But then I'll look to the left to see if that also confirms, and it does. So it confirms here. And let's see, it also confirms that's the top of last July. It was a top before a pretty substantial drop over 200 points, right? So I identified this spot over here at first glance, but then when I followed price history back, it also lined up over the last year, right? So then you continue the same process, or at least I continue the same process through the hourly charts. And I usually stop at hourly. Sometimes I'll look at the 4-hour, but that's the general process of how I get my level. So again, starting from zoomed out and working inward. So multiple time frames are important. It's also important to see if the level lines up on multiple time frames. But you want to make note of the most touches that are near level. And with SPX and certain names, your level doesn't have to be to the penny. You don't have to obsess about the exact spot. Like this level here, it's sort of general, right? I usually give a little bit of a buffer. And it really, that's a whole nother conversation on like how do you time entries, which we can do another call about that. But you don't have to be, sometimes it's perfect. Like this double bottom was very exact. That's usually pretty common for double bottoms. But, when you're watching price intraday, that's where you'll see a lot of people get faked out. Like I actually remember when we broke down here, before this rally started, we broke below this 37.40, 37.37 level by about, 10 or 15 points. And I remember intraday when that was happening, everything looked very bad. You know, sentiment was very bearish. People started to get, you know, like there was really no one saying like, oh, we're gonna bottom here, right? That fake out was pretty nasty, but what it ended up being was a spark of a really nice rally in the market. And when you look back at it on the daily chart, it's like, oh, okay, yeah, that it held 37.37. But on the 5-minute chart, when you're actually trading it live, you know, that did not feel like it was holding, right? So it's important to look at things in multiple time frames and give levels a little bit of a buffer and see how they, you know, how they close over on the day, or how they are reacting intraday as well. So I blindly just by habit start plotting things, but anyways, so the more touches a certain level has, and the more price action a certain level has, makes it important. And also, the bigger the measured move from that level also makes it important. And then multiple time frames. So if you're looking at a weekly chart, a weekly level is going to be stronger than like an hourly level, right? So you can expect a bigger move if a weekly level breaks, or versus, you know, an hourly level. You know, like if we zoom into the hourly, you might not get quite as big of a move, but it's within the context of time. So, you know, if you're looking at a breakout on the hourly, if that also pairs with a level on the daily, that confirms that that level is important. But let's say that there's an hourly level that doesn't line up with the daily, but it still is pretty obvious resistance or support, then you have to just adjust your expectations for that level to resolve itself within that context of time, if that makes sense. Yeah, I'm just going to plot levels here. Okay. Let's see my notes here. Okay, there's one other point, but I'm going to take a little pause here. Well, let me make one more point, and then I'll take a pause and look at the chat. The other point is when comparing stocks to SPX, just a small tip, and you, if you are a member of mine, you know this because I put out an SPX game plan every single day. But pairing market levels with your individual stock levels can create very nice A plus setups. So, you know, if you have SPX breaking over 4076, and Tesla breaking over, you know, 870 or 850, if those pair together and you get momentum in the market, that that's an A plus opportunity, right? Versus say the market's breaking out, but Tesla's, you know, 20 points away from a big level, that alignment isn't quite as good, right? So it's a very big tip that I would give newer traders, and why it's important to focus on charting and plotting SPX and watching SPX price action so you can gain an understanding of the behavior of the stock in relation to the overall market. You can do the same thing with the Qs. So if it's a very tech driven name, you can look at the Qs and do the same thing. All right, cool. I'm going to take a quick pause and just kind of read through the chat here. See what you guys are talking about. I am saving the video. Yes. So I chart on TrendSpider for sharing charts. I like how clean it is. I also chart on Thinkorswim though too. So the system that works good for me, I usually have all of my levels for stocks on TrendSpider, whereas on Thinkorswim, I'm only gonna have the levels relative to the trade that I'm interested in at the time. So, for example, let's look at SPX. So on Thinkorswim, I'm not gonna have these levels down here below. Like, let's say I'm looking at calls over 4160. I might have this 4080 support plotted. Let's say it's a stop level. This as a target to the upside, or this as an entry to the upside, 4160. And then I might be looking for, okay, where's my first targets? Add the next levels that are important here. So I might have, you know, 4078, and I'll usually color it red if it's a stop. Green for 4160 is my entry, and then 4235 and 4300 as white, horizontal lines as my targets, and then none of these levels above, right? So like I like to use Thinkorswim as my sort of active trade manager. So I'll only have the levels that are relevant to the current setup that I'm watching. Whereas on TrendSpider, I just have all the levels. And then those are usually what I'm sharing with people when they ask for a chart. So it just works. I don't use AWAP or VWAP, no. Something I do use from time to time. I'll have to pull up SPY because SPX doesn't show it, but every once in a while I'll look at the volume shelf. But what I've found is it almost always lines up with my levels anyway. So it's like I'm able to identify what are important levels, and the reason the levels are important is because they've had the most price action. If you have the most price action, you're going to have the most volume. So it's again, price is a leading indicator. If you know how to read it, all the other indicators are going to lag behind and tell you after the fact. So for me, it just makes sense. Cool. Let's go back to the chats. How do I decide which 3 to 4 names I watch the next day? Good question. I get this question a lot. And I'll just show you what I do. So I've got a watch list and I do this. I literally flip through like this, and if something like that just caught my eye, so I'll stop. And I see what charts catch my eye, what charts are close to breakouts or generating momentum. Because again, going back to the beginning and just reiterating it, because I think it's extremely important. We make money when there's momentum, period. As an options trader, day trader that focuses on breakouts and our type of trading, within that context, what's important to us is momentum. If you don't have momentum, you can't make money trading directionals. So then you have to ask yourself, well, when do you see momentum? Okay, it's when a stock clears support or resistance. Then you have to ask yourself, okay, well, when's going to be the most momentum? It's going to be when a big support or big resistance level is taken out. So then you ask yourself, okay, well, what's a big support or big resistance level? And it's quite simply a level that's been tested the most amount of times and also has seen the biggest measured moves off of that level. So Oxy has been in a steady uptrend. It's actually been, somewhat in a range. It tried to break out of the range and failed, and it fell back into the range. Okay. Now Oxy's trying to break back out of the range. It rejected 66 and dropped from 66 to 54. It's a pretty big drop. Has consolidated for over a month, about a month rather. It has a nice, so if you look at the chart here, okay, and just are looking at this, you have this base of consolidation, and you see Oxy trying to break above it, right? And you look up and you're like, okay, what's the next levels? 66 is showing 1, 2, 3 rejections or 3 tests. All right, so you might be thinking, okay, it's broke out of this range. Well, it must be good for calls. And I actually posted this on Twitter a couple whenever this was, it was I guess 4 days ago then. And Oxy looked like it was breaking out of this consolidation. It hit 66, which was this level back in June, and rejects from 66 all the way to 62, right? So it's a fake breakout. Spends 2 days of consolidation. Now we're right back to where we started. So you can interpret this as, okay, it rejected resistance the first time, but it held the dip, right? It held up okay. And now we're back where we started. So theoretically, if it can break through 66 this go around, it should have a lot more conviction and momentum to the upside, right? Because it's failed to the previous times. Let's say it fails here again and it bases, but the dip is bought again and it consolidates, and then it goes to break 66 a third time. That's an even stronger breakout. The more times it fails but holds and sets up again, the bigger a breakout you're going to get once it actually can clear that level. And I do get a follow-up question to this all the time. Well, how do you know when it's going to break or be the time? You don't. I mean, you just don't. Usually the more time something is tested, the more likely, the higher the probability is increasing that it's going to break out. And if it doesn't, the bigger the probability of an even bigger move to the downside or rejection that's coming. But the fact of the matter is, every trade is a probability. Each trade has a probability of working. Each trade has a probability of failing. So we don't know for certain. There are definitely clues and things that increase the probability or decrease the probability, such as the number of times it's tested. So this is tested 2 very clean times in the last 6 months. Maybe a third time would be better if it rejects here. And they do have earnings coming up, but the point is, we don't know. When we put a trade on, we're accepting risk for that trade, and it's simply a probabilities game at the end of the day. So the honest answer is we don't know. We only know the probabilities, and they do increase and decrease based on different things, and we try to set ourselves up as traders to be in the highest probability trades that we can, obviously. But there's no if there was a way to actually know, then we wouldn't probably be having this conversation. So anyway, let's keep on looking through the chats. Yes, it's being recorded. How do you decide stop loss? It's a good question. It's relative to levels for me personally. I pick my size. So I like to do everything based on what levels we're doing, because price action dictates what happens next. So on Oxy here, if I was trading, I prefer common stock on a name like this. Let's say I'm trading common stock over 66. My stop loss is going to be the next level of support, which is 66 or 64.50. So that's what I'm doing first. Now I'm like, okay, that's a little under $2 of risk. So how much am I willing to risk, right? So I literally will calculate the difference and multiply it by the number of shares that I can afford to risk for that trade. And that's how so it's based primarily on the levels. And then, so I can calculate my risk and then take it from there. Let's say I wanted a little bit, to be a little bit more aggressive. I wanted to use some more size. Like Oxy has a little level here because it opened at 65.70 and closed at 65.70, right? So let's say I want to use the close of these candles instead as my stop, but I want to use the high of this candle. So I've got a lot tighter risk reward, which lowers the probability of it working because I have to time it very well, but I could use a lot more size. So if it does work, then I'm going to get paid more. But I calculate my size based off what the levels are, and that's how I go about doing it. See. It's the Tesla 880 call was insane. It was like 1,700%. I didn't hold it that long, but still paid. Let's see. Just reading through the chats. Good to see you guys are tracking your trades. Love to see it. A member sent me the trade tracker that I've put out, and is kind of revamped it a bit. I think once that's done, we're going to make that available to everybody. It's a good upgrade. Speaking of which, thanks for the sub, FA. How to avoid fake outs. So the how to avoid fake outs question is very, very similar to what I was just going over with how do you know if a trade's going to work or not. You don't know if you're going to get faked out. That's why it's called a fake out. All you know is you're willing to risk X for X setup. And like I said, there's probabilities that change based on, like the more times a level is tested is going to increase the probability of it working once it does break through. Like Oxy, right here, I'd rate it like a, like a B plus setup, right? But if it rejects 66 again, but it bases and doesn't break below the 64 to 6450 level, let's assume earnings wasn't this week, and it bases here and sort of flags for a couple days, or creates a wedge and then breaks, that to me then is A plus, right? And even then, it doesn't guarantee that it works, right? Like news could come out, something could happen to make it fail. There's always a probability of it failing, no matter what. There's no guarantee a trade is going to work. But so like a lot of people, kind of obsess over being perfect or trying to, like there, you have to, as a trader, you have to accept the variability of outcome. There's unless, if somebody wants to tell me a system that I'm not aware of that has 100% accuracy, there's always a chance of a trade failing, right? So early, this is really important to any new trader, especially, is the earlier you can accept the variability of outcome, the quicker you'll be ahead. Because there's a lot of traders that are really afraid to lose money. They'll put a trade on, they'll blame themselves for a trade not working, or which, there are mistakes you can certainly make, of course. There's no like clear defined, it can be a bit subjective is what I'm getting at, but every trade has a probability of failing. And if you accept that to be true, then why would you ever be afraid when you put a trade on? The only reason you should ever have fear when you put a trade on is because you made a mistake, like oversizing or not accepting that risk, right? So fake outs and shakeouts, and that's part of the movement in the market. You trying to figure that out is, in my opinion, a waste of effort and energy. You can review your data over hundreds of trades, and maybe stocks like Oxy here, let's take the second time it tested right here, 66, maybe over 100 trades, you found that breakouts, when they test a big level on the second attempt, only that breakout only works 20% of the time, but on the third time it works 80% of the time. Okay, now you have good data to talk about, right? And this is the importance of tracking your trades, because you can glean that type of insight from the data that you're collecting, right? So, but even still, let's say that the third time a big level is tested on a breakout, it works 80% of the time, 20% of the time it's still failing. So the 20% of the time it fails, is it your fault? No, it's a variability of outcome. You don't know. There's odds in every trade, and you don't know for sure if it's going to work or not. So our job is to put ourselves in the highest probability setups that we can find, and manage the risk before the trade's taken, and then just take trades. So yeah. All right, let's go through some more questions. It's a great question though, like how to avoid fake outs, because I used to struggle with that a lot, and I'm like, sometimes you can't explain the unexplained. You just at the moment you put a trade on, the next trader could ruin it, or the next fund could go in and ruin it. You can't predict the future. Do I feel like levels that are very close together cause mental clutter? It's a good question. Yeah, I do. That's why, I get anxious. If you want to know a time I get anxious, is when there's too many levels on a chart. There are sometimes I'll look at a chart, see if I can find one that gives me anxiety. I'll just delete everything and start over. And I'll just focus on the most important ones. And if it's not a trade that's close to being ready yet, then that means I just let it go. Come on, give me one that looks cluttered. That's kind of, snow is kind of got a lot of levels on it. Like, yeah, like snow right here to me, like, nah, like those are all probably important levels. But because snow has, been in a downtrend this long, I haven't really looked at it too much. I'd rather look at it on a weekly chart and then be like, okay, step back, zoom out. What are the big levels that you see? Okay, well, up at the highs here, it's pretty clear and obvious. This looks like a big reversal. Does it line up anywhere else? Kinda right here. There's not a lot of price action, price history on this stock, but see, we got the bottom, of course. You have multiple tests right in here around this 160 level. So 160 is important. You have two tests here. Again, doesn't have a lot of price action history, but that is important. So I would, since this is close together, I would typically favor the top end of the range, especially on a weaker stock. So let's just go with that one. And you could even, sometimes when it's like that, I like to make a little box. Whoops. Like that, which is pretty cool. You can do on TrendSpider very quickly. Okay, and then like what else? Does anything else stand out? Like this, there's a lot of price action here. It doesn't line up perfectly, but this is a big level, big area for the stock. So if I'm trading SNO, I'm thinking to myself, okay, what's maybe a decent opportunity for calls over 164, 165, targeting 185, but really, you know, a big pivot on the stock is 265, which that's over 100 points away. So that means to me, I'm probably not going to be interested in SNO for a while. Yeah. So like FDX, lots of levels, but if we remove them all, go to weekly, what are the big ones? Okay, you have obvious support here. Got a bit of a downtrend break. I like that this is similar to Microsoft, how it broke a downtrend, back tested and consolidated near the downtrend, and then is continuing upward. That's actually a really good sign for the stock. Then you ask yourself, well, what's the next level of resistance? Price stopped here, and that goes all the way back to September 2020. So on this, I would say, okay, FDX, decent setup here. I like the breakout of the downtrend plus the back test. It makes it stronger if it holds, which it did. If you're trading this intraday though, like these look extremely fakey, right? Like you're like, oh, it failed. But now on a weekly basis, you know, it's like, oh, it held, right? So that's, you don't know until after. But again, it's just probabilities. So, you know, FDX, now the chart looks much cleaner, right? A couple more levels on here. All right, so we went from a messy looking FDX chart to a very simple one that focuses on the most important levels right now. So if FDX can get over 234 and hold, I like it for a move back to 250. I think it's a bigger trade above 250. That was a pretty big rejection it had. So once it reclaims 250, that to me would confirm the downtrend break more so, and then I'd be targeting like 260, 270. So that was a good question. So same person, different question. What some of the advice you would give new traders that feel sometimes they're not charting enough levels or too many? New traders, focus on the bigger time frames, and like what I just did in the FDX example, just plot the big time frames and wait for big trades. Don't like, I would avoid going crazy about charting levels on like every single time frame. Just wait for the big trades. So one of the original, going back to the original question, was how do you find setups every day? I'm literally just going through like this, and if something catches my eye, like UNH just caught my eye because it's close to all-time high breakout, which is a blue sky breakout, you know, and then I'm like, okay, that's on the list, and I just keep going. Like ENPH, blue sky breakout, ISRG looks like it's trying to break the downtrend here. And so if you're only plotting the bigger levels and you have a large basket of stocks through multiple different industries to look at, chances of there being 3 to 5 of them that are close to making or breaking out are high. And that's where I get my daily watch list every day. So, I get that question a good bit. Yes, I drew all the levels. And sometimes I just erase everything and do it over. Not because I don't like the levels, but because I sometimes need just to refresh them. Or enough price action has passed to where I need to do new ones. How far on the daily do I go back? As much as is relevant, right? So like I'll make sure I'm going back far enough to include relevant price action to the left, but like for Google, like this level down here at 76 or here at 85, it's not really even on the radar until it breaks under 100, right? So I don't really need to. I'll look back to make sure that I'm not missing something. But yeah, I'm only going to focus on, what's relevant. So good question on how do you determine whether to use stock or options. It can be preference, but the main reason is usually liquidity. Like a name like Monster, or even some of them on the daily watch list, like MDB. If it breaks this bear flag break to the upside, it should create some momentum back to 350. The spreads are a little wide on the options chain, and the volume is okay, but it's not great. In those scenarios, it can just be easier to use common stock. There's, like ISRG, some of the cheaper stocks don't have quite as much liquidity. It's really not necessarily the price of the stock. It's just it just depends on the stock itself. But if it has a lower amount of volume or wider spreads, it can be easier to just use common stock. Or some of the companies don't move, like their ATR, average true range, is maybe it's not as big. Maybe it doesn't make moves like Tesla, right? It moves slower. So in an example like that, if it doesn't move a whole lot, but you like the trade, like Starbucks or something, it can just be easier risk reward wise to just use common stock, because some names just don't make that big of moves in one day, but they will trend for weeks, right? So, but good question. Just reading through the chat, trying to catch up here. Joe Artine, shoot me a DM. Your question will take a little bit more digging for me. I want to answer it properly, so just shoot me a DM. Yeah, so thoughts on trading reversals or gaps? Gaps, I don't really like. They're just levels, right? I don't like see a gap on a chart and I'm like, oh, I'm gonna take a trade because there's a gap on a chart. But reversals, like, okay, so I'm gonna try not to go on a bit of a rant, but there's been like a wave of people on FinTwit saying like being supply and demand traders or flow traders or whatever, like trading reversals or breakouts or not breakouts. It's okay. Let me simplify everything for you. It doesn't matter. Okay, like they all can work. And the reason they can work is because at certain points in the market there's momentum. And based on overall market and where it's at, certain setups are more common than others that create momentum. So, in a bear market, when the trend is down, we saw a lot more momentum on rejections than most traders have ever seen because they never traded through a bear market. So in an uptrend though, trading breakouts, you get momentum because it's a confirmation of the continuation of the trend plus breaking out into new price discovery. So there's momentum there. So what I would encourage traders to do that are active and day traders and trying to trade options is consider yourself a momentum trader. You're simplify it. If there's momentum being created based on how price got to where it is, and there's an opportunity, you identify that opportunity. That's step one. Then you determine your risk. Okay, I see the opportunity, have my price targets, and you're saying to yourself, okay, how much can I afford to lose to see if this trade works? And then you're executing the trade. Hopefully, you have a systematic plan for locking profits, and you have your stop loss in. So if it fails, you stop out. And then you review it and log it. And so you have the data. And you do that over and over and over and over and over again. And you find out, okay, where am I doing well? Where could I do better? And you go from there. You don't have to call yourself I'm a supply and demand trader, or I'm a flow trader. You can, sure, but there's always opportunity. Like, you should be wanting to capitalize on opportunity wherever it is. And if you're the trader that's trading directional options, I can tell you from experience that they pay when there's momentum. And the bigger question to ask yourself is, where is momentum at? Where does it exist? It can exist in, a rejection here, like on Starbucks, fail to get through. And then it can also be created once that price gets reclaimed. Like Starbucks had a nice bounce and it's starting to break away from this 84 level. If that continues to hold, it's going to create momentum to 86. So you could have traded the reversal, you could have traded the breakout. It honestly doesn't really matter as long as you're waiting for momentum. It's when you're trying to trade, it's when you're trying to guess and trade like the range, or like, this range or any range. You're trying to trade directionals, you're getting chopped up and premiums are burning and you're not able to win. That's what you want to avoid. So anyway, I said I wasn't going to go on a rant, but I did a little bit. Okay, let's see, what do we got? AMD, it's not a question. I'm just kidding. AMD has earnings this week. It does look good technically. If it can break over 95.44, it's got this is a big downtrend break. I could see it making a run to 100 into earnings if we get a continuation move in the market early this week. But I would say the more likely thing would be we chop leading into it, but we'll see. Anything can happen. It wouldn't shock me either to gap like above it and then kind of get tricky into earnings. Earnings is Tuesday, so just reading the chat. All right, cool. I think I got through most of the questions. Advice to trade the open? That's a good, interesting question. That's a question that I feel like there isn't really one answer to, because the open, so I can make a broad statement, but then the reality also is the open really is going to depend on multiple factors, right? Like, you could have an open with positive news, negative news. You could have an open that's near very big resistance after the market's been running hot for a few days with positive news, or gapping above it or gapping below it. You could be in a downtrend and gap up and gap down. You could be in a downtrend and gap up and gap down. There are a lot of combinations of opens. But what you're probably getting at, and what most new traders usually are asking when they're talking about trading the open, most of them make a rule: I'm not going to trade the open. And I don't think there's anything wrong with that necessarily, because the open can be very quick. And if you're not prepared and don't have a plan, you can get caught pretty badly. But if you have a plan, and then it's also a good opportunity because there's momentum there. But like the first couple minutes, particularly like the first 3 minutes, not a bad idea to avoid until you get very comfortable with how price behaves, because premiums will be all over the place. So, and you know, if you miss a move, it's not the end of the world, right? Systematically locking gains. Good question. So, how I normally do it, and I say normally because I'm always testing ways to improve maximizing gains. But excuse me. How I normally lock gains, it will depend on the size and it will depend on the trade. You know, I'll treat a B or C setup differently than an A setup, right? But generally speaking, I lock, you know, either a half or a third, sometimes a quarter, around 20 or 25%, just as to, you know, to progressively lock gains. Sometimes over the last couple months, I would be more favorable to like the 10 to 15% instead, just because we were seeing so many reversals. But I'll usually take a little bit off, like a quarter, a third. If it's a big position, sometimes a half. It just depends. Around 20 or 25%. But beyond that, and then I'm raising my stop up near the entry. And then from that point, I'm not concerned or looking really at percentages as much as I am the levels on the chart. So I'm looking to get a run into resistance or support, depending if it's calls or puts. And then I'm taking, you know, another third or another quarter off at the targets. And then once I'm all out, I look to roll up using a higher strike and like usually 20% of profits, 20 or 30% of profits from the prior trade. I would recommend reading the small count doc in the education channel on how I would manage one or two contract position sizes. Shout out Jay Allen. Jay Allen, how are you? First time viewer. See how it is. Appreciate the support. Was this helpful? I feel like I went pretty fast. I usually just randomly do Twitch sessions and just wing it. This was a little bit more planned, which you would think would make more sense, but for me, it's kind of counterintuitive. Okay, cool. I will be recording it. I'll put it up in the education channel. I'll throw it up on YouTube. You can always do like a version 2 if there's certain things I didn't cover that you'd like me to cover, or if you want me to slow down on a certain topic and go over it a little bit more in depth. I'm more than happy to do that. But this was a video that a lot of people were asking to go over with the levels. So SR probably means, I don't know. I was gonna say support resistance. Usually people do like S and symbol R, but I don't know. Are you referring to something specifically on my screen that I'm not seeing? I'll take a quick look at pins. Yeah, sure. All right, so pins has been getting crushed. Still stuck on a downtrend. Pretty relative weakness in this space. Yeah, I mean, I don't really see much that's interesting to me. I would say if pins can reclaim this 22 level, it could start to pick up a little bit of momentum. I think momentum on pins sits at 2174 or under the lows at 1680, but relatively weaker stock. Something to note for the week for anyone interested, a lot of the smaller names look interesting. We had a big rally in the big tech names last week, but there are a lot of names like SQ, Take Two, MDB. That's not it. There we go. Some of these names look a little bit bottomed, not gonna lie, which a lot of people I think have been trying to time the bottom in a lot of these names. I'm really curious to see if they break out this week. I'll just say that. But overall, pins is weak. A lot of these names are very weak, but I think it could pick up some momentum if it can break back over 22, 2170, 22 in that area. Yeah, futures, same exact approach with the levels. I just so let's go to this. So like futures, this is soybean oil. You know, I'm plotting the most important levels that I see and then taking trades based off of that. Really simple. Who votes to change the main channel's charts to this theme? I was trying to save it for futures, but I've not really updated the futures account too much yet. Still like testing grounds. But I like this theme a lot. I wonder if I should just use it for the main account. I never change. I don't change. I shouldn't say never. It's very rare for me to change my stop loss after I'm in a trade. I determine it before I put the trade on. So like if I enter soybean oil here, okay, let's say I enter over this level, over 69.64, then I'm gonna look at like the next level, which I would prefer going a little bit closer. This isn't as big of a level, but it's a level, so I'd use it as a stop. I'd be like, okay, I'm gonna buy soybean oil over 69.64 and use 67.64 as my stop. Okay, that's X amount of dollars. How many lots can I afford? What's the the tick value, point value per lot? How much am I willing to risk? Okay, do the math, blah blah blah, and then I put the trade on. No, I don't watch IRS. I don't watch any other indicators. So what you see is what you get. And refer to the earlier part of the video about indicators. I talk about why I only focus on levels. So I explained that earlier. Once I get the recording up, check it out. And I want to see if I can. How do I do a vote? I need to figure out my Twitch life. Let's see if I can figure this out. Hold on. And then I'll wrap it up for everybody. I want to run a poll. Why? How do I do that? Let's see. What is this? Maybe I can't do it while I'm already streaming if it's not enabled. I'll figure it out later. Any other questions? We've been going for about an hour. I know I talked pretty quick, but I wanted to try to keep it relatively quick, but also useful. So if there's no other last minute questions here, I will wrap it up so everyone can continue their Sunday and get ready for tomorrow. Yeah, shop needs over 40. Let's see, where's shop? I thought it was pretty crazy that shop tested that 40, 41 level and dropped literally in 3 days all the way to the bottom of the range and then bounced back to the middle that quick. I mean, this thing is just, it's relatively weaker, which is worth pointing out, but it's been basing towards this bottom since May. It's turned into a very average stock. Like there were multiple times I thought it might turn the corner, but it's been super average, which to me favors the downside. But good range to sell premium in if you like to sell puts, as long as you're okay owning it if it drops 10% on some random news. Cool. All right, guys. Thank you all so much for tuning in. I'm glad that we were able to get this video done. I will get it posted as soon as the recording's done processing. For anyone that missed parts of it, or there. I know there's a bunch of people that were asking if I'd record it to watch it because they couldn't join tonight. I know it's Sunday, so yeah. Have a good rest of your night, and I'll see you guys on the trading floor tomorrow. Peace out.